RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Today is Tuesday, 30th of July. So one more day of July, and then we head off into August, the dog days of summer. Hope you're all enjoying the, I suppose, the Summer Olympics. I don't know, NBC, they basically own the copyright for the Olympics. What a joke. Corporate America. But anyway, they're saying that Americans are actually watching more Olympics this year, and they're quite pleased by the ratings versus Tokyo. But who the heck is going to get up in the middle of the night to watch Olympics out of Asia? So I guess that really shouldn't surprise us. Having said that, hope you're cheering on your local team. Did find it funny. The Chinese soccer team actually got excommunicated from the Olympics for spying on their competition with drones. What's happened to this Canada? We used to be ethical. We used to be moral. We used to be polite. Fuck you. What's happened to this world? Cats and dogs are living together. Anyway. As you can see on the screen, have a nice little itinerary here for the free broadcast. We'll try and get through this relatively quickly. Of course, Brian loves the sound of his own voice. In fact, I was telling another person today that the doctor suggested I exercise my vocal cords more. So I guess that means we'll do 2-hour daily briefs now, something like that. Anyway, actually super excited today. We have our level 3 program, Trading with the Dom, and my day trading buddy. And I love the group that we have in our day trading room. They're so much fun just to hang out with. They're so professional and just traders like bosses, the two of our sort of anchors in the day trading room. Anyway, one of them is going to be in class with me with the level 3ers today, talking about trading with the Dom and the heat map and all that kind of fun stuff. So I'm actually pretty excited about class today. As well, today is Tuesday, and we've had a bit of a drought lately because he was off on vacation with his family, communing with the farm life over there in the Netherlands. We have Sjord back, TRI's CTO, on the Afterparty call here when I'm done this little public broadcast. So super excited to hear what's on Sjord's mind these days, site development wise. Of course, his crypto FA portfolio is looking like we are really well positioned heading into this orgy of crypto, which should happen here through probably 2025. I would even argue probably the remainder of 2024. We're all going to be just sort of humming and hawing about the elections here and what the political sort of landscape is going to look like for the latter part of this decade. Super excited to touch base with Mr. Sjord. Are you there? Are you ready to rock and roll? And actually, what's super cool about Sjord is he comes on here even through the public broadcasts. So he's all ready to go. You ready to rock these people's worlds here today, Mr. Sjord, Mr. CTO?
Yes, we are.
All right, there he is. So super excited to have Sjord. I think, yeah, well, anyway. So as you can see on our itinerary, we'll take a quick look at the breadth. Of course, we have the breadth on the screen right now. We'll talk a little bit about Econs. We had some retail sales come out this morning. We had the JOLTS report, which is, I think, one of the Fed's favorite reports to follow. Home price index down in the States, and Dallas Fed services index. Remember, we had the manufacturing index for the Dallas Fed come out the other day, and it was a train wreck. So we'll see how that region of the U.S. is doing here. On the services front, and considering the aging baby boomers, I think the services sector is probably doing pretty well. We'll talk a little bit about broader market price action. There was very popular semiconductor stock that's putting in a big fat smile. Actually, it smiled at us, I think, about a week or two ago. And it's actually leading the market lower here today. Was posting those charts in the lounge this morning. So not really a big surprise that it's coming off. But if anything, really great analogy. Everybody fell in love with the company. And of course, they were probably chasing it up. My favorite market guru, Stanley Druckenmiller, actually got out of the stock about 6, 8 months ago. So ironically enough, he's probably just sitting there laughing at the public over all the machinations in that stock, but we'll look at that in a bit. Of course, never a daily brief without a quick boo at the corn and others, senior names in the crypto space, things like Ethereum. And we should probably just review the fact that, of course, today is day one of the 2-day FOMC meeting down in the States. And if anything, the day trade in things like crude oil today was a perfect analogy of FOMC days and really how you should probably just stay out of the market through this. And sure enough, it was just a meat grinder there this morning. But also, too, I think it's important to sort of, just kind of reiterate. I mentioned it yesterday. I don't know whether it resonated with the audience, but really, you should all respect this. What is the price action heading into this Fed announcement? What is the price action around this Fed announcement? What is the price action following this Fed announcement? That's actually incredibly important information that the market is giving us. Most people in the public completely disregard this, but if you actually fancy yourself a professional market participant, very, very important information. So not a bad idea. We review that. And on a sort of a side note, we are into the sort of jaws of the earnings season. If I'm not mistaken, I think Mr. Softy is reporting here today after the bell. And we've had various different major companies report, some hit, some miss. So not a bad idea to just take a quick boo at that. And then finally, Chris actually was the one who brought it to my attention. We've been talking about the Japanese yen completely melting down of late. Maybe it's high time that we actually get a little bit of a counter trend rally there, which ironically enough will do nothing more than just set up new shorts. So the question ultimately here is what the Bank of Japan is meaning, and are they planning on manipulating interest rates over there? From what I understand, the typical Japanese is getting absolutely destroyed with this inflation that they basically manufactured there to try and, prop up the Japanese economy. Well, it's sort of, it's almost like it's in a zombie state right now, which is a shame because I would hate to think that we in the West have to follow along the same path as the Japanese, but it wouldn't surprise me considering demographically there's about 10-15 year lead on the Japanese with us in the West. So, all right, so that's basically what we're going to try and cover. I know it is a lot of information, so probably we'll just touch base on things. And hopefully by the bottom half of the hour, we'll head off to Afterparty land and we'll go hang out with Sjord and get a nice report of what he's seeing in the marketplace. So with that said, I have to pull up my little cheat sheet now. We did get some feedback that some people didn't like having a little cheat sheet on the screen the whole broadcast. So I guess as a compromise, I suggested that we'd go through sort of the topics and then ask Chris if he could minimize that so you aren't distracted by that for the rest of this video. So anyway, let's see how this version of this goes. Anyway. All right, so where are we here? I would like to see that video. Okay, where did we go? Actually, I think it's this one here, isn't it? Yeah, there it is. All right. Okay, so first things first, Zibret kind of cleaning itself up here on the short term, so I suppose that's good. We were getting maybe a little frothy up there, but we're still, not really an overly happy market. Medium term, a lot of markets are still above their sort of longer term trends. The fast moving average is above the slow moving average. So we're still getting a lot of names that are relatively bullish. We had a bit of short-term weakness here, and I think you can actually see that in the ES when we look at that price chart, which, of course, it's always a challenge which screen I have on all of these things. Let's see, I think I have it over here. There we are. So we've been sort of talking a bit about this. This is that short-term weakness. Does this actually start translating into medium-term weakness? And we're breaking down in earnest and continuing lower. The only thing I would say about this is, remember that sort of message about what does the market do into a Fed meeting? And in a weird sort of way, if the market is really soft into the Fed meeting, well, you might find that on the other side of the event, we actually get some rip roaring rally. I have been sort of humming and hawing about, have we a broken bullish structure here? And if that's the case, then counter trend rallies back into reload short zone, especially against things like Mountain Man. Notice they actually left a pretty sizable gap. This is going to be a hell of a fight level here in the marketplace. There's no doubt about that. Going forward, does this set up a short setup? I'll tell you, if especially off of Bombs here, if this is the ultimate low, I don't know whether it is or not, but if it is, then we can probably start doing things like chaos theory. And actually 2.618 says that we could rally all the way up here. And what do you think the odds are that that's like 78.6? That's probably pretty good. So I don't really think there's a trade per se to be done here. And of course, is it really a good idea to strap on a position heading into a Fed announcement? I think it'd probably be best to wait till after the Fed announcement and all the dust is settled. Remember, we always said the rule is don't trust anything you see in the market till 1 full hour following the Fed. I don't even really believe anything that I see here. Let's see what this thing looks like following the Fed. I wouldn't even be surprised if there's some sort of big counter trend rally here prior to that Fed announcement. So we'll see what happens. Only time will tell. Having said that, new little M's coming in here. So if we do start to melt down through these lows from the other day, then you can see 50% of the entire range is still quite a bit lower than where we are right now. So, technically we still could work our way lower. But does this actually set up a trade for me right now? No, there's nothing to be done there. But I do think that it sort of validates what we're seeing out of the breadth. It's not really a pretty picture. If anything, what we'd like to see is the fast go and put in some sort of W, break back above the slow, and then we know we're back into rip-roaring bulls. And actually, one really good image of this that sort of articulates this kind of market state right now is look at the histograms. So you can see even crypto in the short term, they're just throwing the baby out with the bathwater, which is a little scary because you can see that on the medium term, crypto is still pretty uppy. So if this sell-off if this sort of orgy of FUD continues unabated, crypto does have some room to fall down here on the medium term. Of course, you all don't want to hear that. But what we'd like to see is, can this please firm up here a bit? And then we start, probably climbing the wall of worry, heading into that latter part of the summer. And, maybe if we're really lucky, we can actually get this crypto market to actually start, Wing out. Like I said, this is the S&P. Crypto breadth index looks very similar to this. I'll show you maybe in the after party if you want to see it. But here in the short term, we're very oversold. And actually, interestingly enough, you can see on the medium term, the country funds are actually very close to being oversold. And whenever we get one of those messages, country funds are oversold in both the short and medium term. Oh boy, watch out. Could be a huge reversal. Did also notice too, and I haven't looked at the price chart. Maybe we'll look at it in the after party. Our CTO here is pretty bullish of things like PayPal, and I think PayPal jumped up quite a bit here today. But also he's very bullish of things like Alibaba, and I think I heard that the Chinese internet stocks were catching a bid there. So be interesting to see what his sort of look is. And I did hear that the Chinese are kind of humming and hawing about maybe doing another stimulus program over there. So, we might find that we actually dip into oversold here on the country funds in the medium term. And if that's the case, that actually sets up an absolute no-brainer buy signal for the world equity markets. We're not quite there just yet. Anyway, let's see what the aftermath of the Fed is. So that's sort of your breadth report here today. Nothing to get too excited about other than what I'll say is it does look to me like there are parts of the market that are actually getting pretty oversold here in the short term. Econs, I hate to say it, but I see these econ reports that came out today, and I don't see anything here that justifies the Fed lowering rates. This, of course, is one of the Fed's preferred reports, the JOLTS, job openings and quits. What this says is the market was looking for 8 million. Came in at 8.18. If we actually, which is, 8 million, 8.1 million. Not huge numbers. I don't think it was a huge miss or a huge beat. Number of job openings was little changed at 8.18 million. Remember, the Fed is very sensitive to the employment situation. So if we did see that they're just like no job openings, i.e. people are getting fired right, left, and center, and the economy is turtling, we're probably going to see this number actually go negative. But if this thing actually W's out and starts ramping up, then that means the economy is doing perfectly fine. I suppose you could argue this is what the Feds kind of wanted to see was this is just tons and tons and tons of help wanted signs. The economy's just booming. Everything's racing. Wait a minute, we got to raise interest rates, slow this shit down. So they've accomplished that. Question here is, do they actually tank this thing into doing things like going negative? I don't think so. It looks to me like even in the absolute depths of the sickness, silliness that they did when they even closed every single thing's, the economy down. You can see there was still, 4.6 thousand. And these are, I think this is thousands, so 4.6 million. So it's, making lower highs and lower lows. I suppose if you actually do start seeing this thing W out, then it means that, okay, this employment picture is back on the upswing. Economy is expanding dramatically. There's nothing really to get too excited about here. Remember, Jerry just wanted, after the sickness, I even remember him specifically saying, look, at all I want is I just want the market to get back to where we were pre-sickness. And this, of course, was the stupid socialists going absolutely crazy and jamming through just absolutely insane money printing, spending. Keep in mind the US government, along with the Chinese government, this place is so fucked in this country. But all of these Western societies, they are still spending money like we're in some sort of sickness environment. This is why we have this crazy ass inflation. Makes no sense, other than this is like a socialist paradise. Everybody's going to work for the government, which I don't think is healthy. And if anything, the Fed, I even heard comments from the Bank of China here that they even are starting to get angry at the federal government of my country because this socialist agenda just, they won't stop. And yet it's totally destroying our society. Oh, well, what can you do? Anyway, so, that's just a mixed bag. If anything, the Fed is getting the sort of employment picture back under control. And as I said earlier, I think they just really want this thing to get back down to, sort of 6-7 area. Same thing on the this is the job openings. The quits, here are the quits. This is the same sort of logic. Um, if people are quitting their jobs because they think they can find other jobs because there's tons of help wanted signs, and the premium paid for new employees, we'll give you a higher wage, we'll give you a higher wage. That's this thing moving up. So the quits, I think on balance, the public, of course, the public has not been happy through all of this. But the public is sort of, they're kind of dying 1,000 deaths as they're sort of reining in the inflationary pressure from the jobs front. So there's really nothing. We're not falling off the cliff here. It is interesting to see that quits is now back at that 2019 level here. So the question ultimately is, do we engineer a soft landing and this thing sort of W's out and then we start expanding again? There's no signs of expansion here yet. All right. Chris is reminding me that I'm talking way too much, but I'll keep moving forward here. Um, other than that, Econs, we had talked a little bit about the Dallas Fed manufacturing the other day, came in just absolutely turtling. Services, I would expect that actually the services part of our economy does fairly well here. Baby boomers are in retirement. Baby boomers have all the money. In fact, actually, there's even still the greatest generation still around. I mean, they're in their 90s and hundreds. So they still have their money. They haven't even moved their money to the baby boomers yet. And the baby boomers are all now comfortably in retirement. And I have a feeling, kind of like what I said about Japan, that our society is probably going to move towards sort of a more of a services society as we're just locked in this baby boomer retirement mess, probably for the next, 10, 15 years, if not longer. So services side of the economy, I don't think it's turtling. It's a hell of a lot better than it was for the Dallas area. I would argue that Texas area, probably also Florida, they're going to have to unwind a little bit because they got so much of a juicing up there with the whole sickness environment and everybody getting out of sort of the blue states, I guess, if you will. I think that pendulum's swinging back now. So not a big surprise, but at the same time, too, not falling off a cliff. I mean, minus 0.1 when previous report was -4. It did come in a little softer than expectations, but certainly not recessionary. Consumer confidence numbers coming out today, actually showing a bit of an uptick. Now, this is the conference board. So this is more of a private report than government report, which probably means it's probably more realistic. But it looks like the consumers are sort of stabilizing here. And I think a lot of this has to do with, if we look at those inflation deflation reports, they're kind of stabilizing in here. Gas pump prices, they're not like making new highs, kind of stabilizing. So I can understand that the consumers stabilizing. I think that's the best way to describe this. And at the same time, too, you've got house prices year over year moving up the better part of 6%. Actually, market was looking for a little higher than 6%. So it came in a little softer than expectations, but still miles and miles above that Fed's, idealized 2 to 3% inflation window. And really, they said 2% over time, right? But and of course, you've heard good old Jerry talk about this is the problem is that house prices, and you can see both the year over year Case Shiller and just the headline number here. Case Shiller actually came in even higher, 6.6%. Market was looking for 6.9. Actually, let's say 6.8, doesn't it? But the point here is that they're heading in the right direction. So that's good. But we're nowhere near that 2-3%. And then, I've talked to you guys lots about this. This used to be a really, really popular econ report in our society back 10, 20 years ago, the Johnson Red Book, which basically is sort of a dovetail to the retail sales reports. And I've also talked to you at length about how, the gentleman that I respect a lot in the marketplace, Stanley Druckenmiller, he was just going absolutely crazy because the Feds had let the inflation problem just get absolutely out of control. And you can see that, of course, in the Johnson Red Book numbers from, the middle of that sickness. when they had like retail sales up like 20% annualized basis. That's hyperinflation. And that was just stupid, irresponsible. Or this is all part of the Great Reset plan, right? Yeah, don't get Brian started on that shit. Anyway, they tried to rein things in. Um, Looks like, the retail, the sector is coming back to a certain degree. And if anything, this is probably half the problem that the Fed was sort of saying that, beginning of 2024, we started to see those inflation numbers. I think you could actually have seen them coming back through the latter part of 2023. So you could actually argue that this was sort of telegraphing the problems that the Fed saw, and why they aren't lowering interest rates. And you can see that actually these numbers even ticked up higher through these highs just even recently, right? This is the May, June, July report. You can see that this is starting to M out. And I think that's probably one thing that the market sort of hoping that we get those lower interest rates from the Fed going forward. This is what they really want to see. And we got to get this thing trending back down. And of course, remember, 2%, that's the number the Fed wants to see to actually feel like, okay, they've got things under control. So this, if anything, I think is a perfect analogy of what we want to watch to see actually trending lower, that they've got this inflation problem licked. And if they go and lower interest rates now, this damn thing's just going to tick right up. In fact, the Bank of China here has lowered interest rates twice, and they're already starting to talk about the housing bubble is starting to reinflate here in Canada. So all of the hard work, and this is what, Paul Volcker and all those people from the 1970s and, Mr. Friedman, who I respect immensely, kept warning about, is that if you take your foot off the brake at all with regard to inflation, it'll instantly come right back. And of course, we all have seen those reports that I put out about the hyperinflation. Hey, look at our buddy's back. Can you hear that, Chris? All right, so that means I have to go and change the Zoom call background audio because I really don't want you guys to have to deal with that. Just give me a second. Audio settings. God, do you think I ought to fucking move out of this stupid third world shithole that I live in here, eh? China, what a joke. All right, I've put the audio setting to high, so hopefully you don't hear that background noise anymore, but who knows? We'll see what happens. I just won't try and change my octave here too much for you. So, point of the matter here is this is now starting to head in the direction the Fed wants to see. And what we really want to see, that the Fed has indeed slayed this dragon. So we want to see this number down below this 2.5%, which of course brings us into line. Remember, this is a consumer-based economy. So this number is actually extremely important. Can you hear that now, Chris, or is that muted now? I can't even hear you. It's so bloody loud here, but I hope you said no, I can't hear it. All right. So we talked a little bit about FOMC. It is day one of the 2-day meeting. The middle of tomorrow, of course, we'll have our FOMC meeting and the announcement. And as our rule goes, don't trust anything you see in the market until 1 full hour following the Fed announcement. So with that said, I think we'll finish off this free broadcast with just a quick boo at yield corn. And actually interesting, the stocks, they just can't buy a friend here today. And as I had kind of pointed out earlier, a lot of this is really being driven by NVIDIA. So you can see, we've talked, if anything, really, really good lesson for all of you. What are we supposed to think if we ever see the market smiling at you? So not a big surprise. Smiles have come in and down we go. Fog and bombs, interesting how we have a POC right here. So my hunch is, and that's also 50% of the trading range. My hunch is this guy's got to come back to this, what is that, $89, $90. So we're still sitting at 103. So this thing could still lose, a good 10% here, no problem. Down 7.25 on the day. And I was sort of warning the the site members that if we lost this tail low here, look out, things could just absolutely go crazy. Holy shit. I don't know whether you can hear that or not. Jesus, that's horrible. Can you hear that, Chris? I can't even hear Chris now. Okay, well, that's good. Okay, so bottom line here is tech definitely leading the way to the downside. Now it's actually interesting to see, like, even the Dow even was trying desperately to hold in there this morning. It was sort of holding up the ES, but man, we just fell apart here today. Just oh, boom. Interesting how we banged into 4.669s here on ES. So my hunch is we're probably near done here on the ES. You can see 4669s. Interesting how that's lining up right at ATR on the NASDAQ. So still a little bit further to go there. Interesting, actually, the only trade idea that I liked, and it's just a little dinky trade, was actually had an absolute textbook El Tangonator, which is a setup that we teach in the school program, fire on the euro. And actually, interestingly enough, it looks like we just had move stop to scratch level hit here. So if anything, we should probably move the stop up to scratch. And if the market pulls back, fine, or just walk away at scratch. So we'll just leave that. But what I wanted to show you was, I mean, just absolute destruction in the tech stocks and being led by that NVIDIA. Finish off with just a quick boo at the old corn. Not a big surprise. We're in reload zones. We're against downtrend lines. An absolute mess up here. I don't actually have a trade signal per se. Wicks and tails like to be eaten. I wouldn't be surprised if there is some sort of counter trend rally, probably through the Fed or even through that hour following the Fed announcement. So just keep an eye out for that. This, I mean, really, you could argue just in the short term, this is the daily price chart. Wicks and tails like to be eaten. Candle body highs and lows for trade location. Hate to say it, but this looks like the top end of your trading range. That's the bottom end of your trading range. And this is just our range. So enjoy. And as I've said repeatedly of late, I said it on the Sunday broadcast. I'll say it, said it yesterday. I'll say it again today. For God's sakes, do not take trades on these trend line breaks here. If this is really a bull, then all it's got to do is just get its butt up above there, give us some bullish structure on the other side, and away we go. But as for now, this is just big hurry up and do nothing. We look at the lower time frames. Oops. Actually, you know what? The futures might actually be a better chart. There is that bottom end of the range. There's the top end of the range. This is the daily futures chart. And fascinating how we're basically come right into a massive sort of trend line apex here. And really, I might argue whatever the actual signal is, if we can somehow W out here, great, we're a bull. If unfortunately this is technically a 3-bar fractal, so that means if we go through that low tomorrow, if this is the extent of the selling today, then that actually becomes an empire top. And this was just straight up with a huge gap right there. So look out. I mean, this could turn into like dump Vegas here following the Fed. This is a very steep move. And I've also sort of counseled all of you that, which chart was it? I don't know whether I have it on here or not. I think it was this one. Yeah. These rallies seem to go about 20, 21 days or so. So from that sort of consolidation to that peak, from that consolidation low to that peak, that consolidation low to that peak, right through FOMC. Be careful here, folks. This is dangerous. If this is a bull, just let it get above here, give us some sort of W, and away we go. But right now, I think it's dangerous for you to actually assume that this is a bull. And ironically enough, over on the Ethereum front, this short is actually still working. So there really is nothing to do here. I've moved the stop on this sort of second half of this trade to a break of this high. If we do actually go out and bust through these, I think that creates like an AB equals CD, which probably takes us right back up against the original trend line. We don't need to see this winning trade turn into a losing trade. It'd just really be a question of, do we lock in profits or do we just have the stop at scratch? Might even argue if this goes and M's out, I might even move the stop down to this M so that if it busts this on some sort of counter trend rally, then we just hop. But what I did see, which was really interesting, if you're a fan of that ICT guy, I think this is a really good example of that bullish structure being broken. Kaboom. This is that sort of fair value gap with the huge just face rip move. And then counter trend rallies back up into this original topping location, 61.8. I like to use a mountain man level as sort of the reference. Actually is a trade location for man. Ironically enough, ran right into that trend line and just stopped on a dime. So you can tell if this thing, like I said there a second ago, if this thing goes and M's out and we actually see this thing trading well below that low there, and that low is 32.59 even, then I think the bear's back in control, and let's see where the hell the ultimate lows are. So there's your market. If we look at the total market cap space, this is minus Bitcoin and Ethereum. Well, there's that same sort of M that you're seeing on Ethereum, and I'm even starting to see it also a little bit on SOL here, where I think this guy was actually leading the charge here recently. Oh, I don't know why we lost the symbol. Anyway, actually, you know what? Why don't we'll have this conversation in the after party. And actually, we have Mr. Crypto here, probably one of the best analysts in the space that I've run into. And he's going to talk lots about all his various interesting ideas. Some are Wing, some are Ming, but the long and short of it is fundamentally he likes these names. So I'm actually looking forward to hearing what he has to say about the crypto space right now. So I think we'll leave it at that. Come on over to the after party if you can. I'm super excited. You ready to rock this thing, Mr. Stewart?
Yes, I am.
All right, there you go. So on that note, have yourselves a great rest of your day. PMA for the win. Slow and steady wins race. Remember what your number one job is. Don't take no wooden nickels. And as Brian always likes to say, the only thing left for me to say is bye for now.